how is Fiserv thinking about stable coins right now? What's the moment?
Yeah, so it's a very interesting moment because obviously you have regulatory changes still not completed, but there is a clear legislation in the US. There are still a bunch of things to be worked through, but there is clear legislation that defines how stable coins are going to be used. And obviously there are a number of companies, mostly fintechs, that are aggressively pushing stable coins into the mainstream. I think from our perspective, we come from the angle of what do our clients want, and our clients are both banks and merchants. And when I think about banks, they are thinking about how can I offer stable coins to my customers, but how can I do it in a way that's linked to my existing fiat business? Then they're thinking about what does that mean for me? What does it mean in terms of liquidity? And what does it mean in terms of the need to manage my deposits, inflows and outflows 24/7, as opposed to, Fed cutoff times? Then they need to think about, okay, now I have a stable coin. What are the kinds of products that I can offer to my clients that I couldn't before? And then they're thinking about what if something goes wrong? What are the consumer protection rules that we need to have in place if more and more consumers are thinking about stable coins? And I think because of the way the industry has evolved, not a lot of companies are thinking or are helping banks to answer those questions. And from our perspective, that's where we think there is a real opportunity. If you look on the other side, on the merchant side, they're thinking the most obvious question is, can I use stable coins to lower the cost of payment acceptance? As you know, especially in the US, accepting payments can be expensive depending on the payment method. Can stablecoin be a more effective way to do that? Then they're thinking about, for the ones that manage marketplaces, then they bring together buyers and sellers. Each and every one of them has a rewards offer or a different way in which those buyers and sellers can interact. So the obvious question is a stable coin a more efficient way for me to create that kind of ecosystem in a way that my buyers and sellers can then have something that they can use even outside? Then they're thinking about their suppliers or their international sellers, and they're thinking about, and we've heard that argument being made, cross-border payments are expensive, they're difficult. Can stablecoin be a more efficient avenue to do that? And then for some of them, they're also thinking about their own cash positions in various currencies, and is a stablecoin a more efficient way for me to manage that liquidity? So I think probably I said too many things, but I would say these are the kinds of use cases that we hear from our clients. Some are real, some are more complicated, and some are unproven.
So obviously you cater to merchants and to the banks. Are you seeing more or less demand from either one of those camps? Or is it about 50-50? Or how do you think about that?
Yeah, it's they come from a different place. I would say from the merchant, it's a question more of opportunity. Oh, this thing is out there. What should I be doing and what should I be thinking? For the banks, and especially if you think for a company like Fiserv, we serve all of the tail of banks. Think of smaller community banks and credit unions. And for a lot of them, the question is, oh my God, stablecoin, what should I be doing? So I think a lot of banks are starting from, let's call it a combination of a defensive position. I see outflows to the crypto firms. I see outflows to the crypto trading companies. I see the big banks making announcements. I cannot spend hundreds of millions of dollars to develop my own solution. What should I be doing? But they also see they see the downside, which is deposit outflows. They see the danger, which is liquidity loss. But they also, some of them see the opportunity, which is this is still a fast evolving space. And therefore, if I can be more progressive than others, and if I can bring to my clients a solution before my peers, maybe there is an opportunity to do something and gain market share and change the market perception around me. So they come from a different standpoint. I would say the banks are the more eager ones to make sure they don't miss the boat.
So going back to the merchant side of things, so when they were initially speaking to you about stablecoin settlements, let's say a year ago, what did you tell them then, and how has that answer evolved compared to today, if at all?
It has evolved quite a lot, and I think the regulatory clarity was the catalyst that drove the interest. Because in the past, if you remember, a year or 2 years ago, the only stable coins that you could find were the ones that were linked to crypto activity, and 90+% of stable coins were used as on-ramp and off-ramp to Bitcoin or other cryptocurrencies. And cryptocurrencies, because of their volatility, most merchants do not see them as payment methods because you get paid, 1 Bitcoin, you just have no idea what that Bitcoin will be worth in USD. So for most merchants, crypto is not a method of payment, at least not now, whereas and stablecoin was not a viable alternative. Now that stablecoins are regulated and there is an actual framework on which they can work, especially the big ones have started to think about it. I mentioned some of the use cases, but I would say they're all thinking about, can I use that, again, reduce cost of payment acceptance or make my operations more efficient? So I would say the conversation is day and night, especially for the larger companies and the companies that do business in multiple jurisdictions, or the companies that manage platforms that bring together millions of buyers or sellers. Like, to give you a simple example, if you are any one of those large companies, and let's say you have to pay developers or suppliers or sellers that sit in parts of the world that have high inflation, they would much rather pay it in a US denominated coin than in a local currency that is devalued by some high percentage every month. So all of those things are things that both they and some of their customers are looking at. My personal view is a lot of the value here will come from eliminating inefficiencies. And when I look at payments in the US, generally speaking, they're pretty efficient. When you look at the inefficiencies or the costs from a merchant perspective, they are in places like payment acceptance. They are in places like cross-border payments, not dollars to euro. Dollar to euro you can do all day long and you can get great rates, etc. But you go to some of the emerging markets, you go to some of the inflationary markets, and there suddenly that immediacy of being able to do a wallet-to-wallet transfer in the same currency real time becomes much more interesting. But on the other hand, and I'm sorry, I'm going to stop my long answer to your question, when you pay with your credit card, you know what happens. Something is wrong with your transaction, there is an 800 number, there is your bank, you know what to do. With stable coins, you have an immediate, irreversible transaction, and therefore both the merchants and the banks need to come together and say, what are the rules for this payment method? And there are precedents, there is Zelle and there is RTP, so there are other ways in which the industry has dealt with real-time payments. We just need to bring the same kind of consistency here, because once consumers start using stable coins, they will want to know what happens if something goes wrong.
And on that note, building on that answer, how mainstream do you think stablecoin usage will become in the future? Like, is there a chance that this is a edge case and only 0.01% of the population actually wants to pay in this way? Or do you think it's going to break through the mold and become just as mainstream as swiping your credit card or paying bank-to-bank transfers using your fiat currency?
Yeah, leaving aside for a minute the technical aspect of whether that stuff needs to happen in a distributed ledger or in a centralized ledger, the having digital money that moves 24/7 at zero cost and zero friction is where the world is going. And we've seen that, for example, in India. It was a centralized infrastructure, not DLT. It was a centralized infrastructure, but UPI literally brought real-time payments to a country of more than 1 billion people. If you look at Brazil with Pix, you have something very similar. If you look at China with the electronic RMB, which was created for different reasons, once again, you have the same thing. So in my view, having a digital 24/7 frictionless currency is something that is here to stay. And when you think about some of the future use cases, like people talk about agentic commerce, well, you need decisions for micropayments in milliseconds. You need some kind of digital money to do that. So in my view, one way, shape, or form, we are going to move in that direction. Whether that's going to be the stable coin in its present form, whether it is going to be some more centralized solution, etc., time will tell. And I think different countries and different regions will follow different approaches. The countries that I mentioned, China, India, and Brazil, all followed a centralized government-led approach. Europe, from the way they talk about it, probably it's going to be similar. The US is following a more decentralized, company-driven approach. And I think the sweet spot for someone like Fiserv is to take the side of the merchant and to take the side of the bank and deliver a solution that works for them. And the reason why we built FIUSD is not to compete with Circle or with Paxos or with any of these companies that have the scale around stablecoins. It's more to develop something that's custom built to solve the specific problems that banks and merchants are trying to solve.
Well, talking about building, another way to get in on the action is to buy companies already doing things in this space. Like Stripe paid over $1 billion for Bridge. What does that tell you about the future of this space? And did it change how you think about your own roadmap?
Yeah, I mean, it's a very dynamic space. It has very low barriers to entry in terms of developing a product, but it has high barriers to entry in terms of doing it right. Because it's one thing to do a wallet-to-wallet transfer, like 3 engineers can go build that. But then when you embed the scale, the SLAs, the API response times, etc., that enterprise clients are going to look for, and then when you embed the AML, KYC, OFAC, and all of those things that you need to do when you move money domestically or cross-border, suddenly you need scale and expertise. And so I'm not surprised that the company that's forward-looking and has the scale of Stripe felt that they needed to make an acquisition so that they can accelerate their road there. In our case, also what we build is accelerated by an acquisition. We bought a company called Stonecastle, which allows us to build our own end-to-end stack around the stablecoin. Stripe's approach is more around wallets and money movement. Our approach is more about embedding a stablecoin infrastructure into the existing technology that banks use. So our approach is very different from Stripe, reflecting the kinds of clients that we have. I would say on the merchant side, they are not very different.
Fine. And if you were an acquirer thinking about what to do about stable coins right now, what's the one thing or the top 3 things you would tell them to get on with right now? And what are the things they can perhaps wait with?
Yeah, I think the answer really depends on what kind of merchant you are. I would say if you are a small business, just make sure your payments provider allows you to accept stable coins and crypto so that you are prepared for the clients that want to use that. If you are one on the completely other end, if you are one of the largest, $100 billion or $1 trillion company that manages global marketplaces, this is a unique opportunity to go and add differentiated value to your ecosystem and move more of those transactions onto your platform and away from all of the intermediaries that you are using, following a much more modern technology stack than the hundreds of different touch points and endpoints that you have today. So I would say you need to think about it very seriously right now. And then for the mid-sized ones, it depends on who they are trying to be. If they see agentic commerce and AI, something that's going to transform their business, then I would say stable coins kind of tie very nicely with that. If they are in a more traditional brick and mortar B2B environment and they do business mostly in developed markets, I would say probably give it a couple of years, see what happens. And where I've seen some of the more innovative use cases are some of these marketplaces. By the way, I would say a lot of the innovation started outside the US, especially in Asia, a couple of years before it came to the US. In Asia, you will find some of those more forward-looking marketplaces that already have an in-house blockchain infrastructure that connects all of their subsidiaries. In this case, you can have a stable coin running 24/7. If you run it, and so I'm sorry to get a bit technical, but if you are a traditional company and you run your typical SAP or Oracle system with cutoff times related to the Fed and so on, you put a stable coin, you're not going to capture any of the value. So you need to do a bunch of work if you want to capture the value of stablecoins. Stablecoins are not panacea. They are a 24/7 digital currency. You need to have the rest of your organization ready to support that.
And thinking specifically about acquirers, so the people in the middle, I guess, moving the money. If you were an acquirer now, how would you have thought about the role and the opportunity associated with stablecoins? Is it a threat to your margins? Is it an opportunity to create new revenue, or a mix over the next few years?
Yep. So we are acquirers. We're actually the largest acquirers in the world. And the answer is, first of all, you cannot ignore it because none of us can forecast the future, and maybe the adoption will be very slow as we talked about it. Maybe the adoption will be like UPI in 3 years, it's going to take over, right? So you cannot ignore it. You need to make sure that you are ready, both from a technical standpoint and from an infrastructure standpoint, to support what is a new and emerging payment method. The second thing is, for us, like as an acquirer, we are Switzerland. Our job is not to pick winners. It's not to say Visa, MasterCard, American Express, this debit network, that debit network, real-time payment, Zelle. I don't really care. I want to be able to offer to my clients every payment method that they need in order to run and grow their business. So for us, it's really important, both stable coins and crypto, to make it available to our clients. What's going to happen to the margins? I think that's a great question, which in my view is broader than just stable coins. Generally speaking, the world is moving away, and that's true in payments, that's true everywhere. It's moving away from things that are commoditized and moving more towards things that add value to the clients. So payment processing at its core is becoming more and more a commodity. We can argue who does it better and who has the highest uptime, but it's not that very different. Where it becomes differentiated is when you help clients optimize across those payment methods, when you help them protect against fraud, when you help them understand who their clients are and what they're looking for, when you help them with agentic commerce, when you help them with digital identity, when you help them with insights, with value-added services. That's where the future is, and that is where success or failure in payments is going to be. The rest, over time, is going to become table stakes. Whoever doesn't have the table stakes will stay behind, but just having table stakes will not be enough to succeed in this space.
Takis, super interesting insight. Thank you very much for your time.
Very nice to meet you, and thank you very much.